This is interesting. Now the Dow Jones Industrials down 98 points. We do have session lows. We seem to be increasing our losses at the moment. Breaking news. We've just got 59 minutes left of trade. It's the energy sector that's the biggest loser today, down more than 2%. That's its biggest drop since January. Look at this. 39 of the 41 energy stocks in the S&P 500 down, losing ground, losing air. Meanwhile, we have Fed whisperer John Hilsenrath here to explain why a Fed rate hike shouldn't be feared. Scott Redler on the floor of the New York Stock Exchange to tell us why we're suddenly losing so much momentum here, at least during the decession, right? And Chris Robinson in the pits of the CME to tell us the best way to set up for this week. Elliot Warren at the NYMEX on why the energy markets are flailing. But first, John, I want to start with you. We have the April jobs number. It moved the ball on Friday, but suddenly that ball has completely disappeared, or it's rolling out into the middle of the gutter of the street. What happened?
Well, I think there was some relief that people got on Friday that the job market looks like it's getting back on track, but the economy certainly is not kind of roaring back to life. And I think investors this week are going to be looking at the next batch of data. The big one coming up this week is the retail sales report coming out Wednesday. We've got to see confirmation that people are spending money.
It can't just be one piece of data. It cannot. But I'm just wondering, did the jobs number, which was really good, like a Goldilocks number, neither too hot or too cold, did it do anything, John, to change the roadway or the landscape, make it a little bit easier for the Fed to tighten rates later this year?
Well, I think it helped them to get some confidence that the first quarter was an aberration, that it was weather-induced and related, that this weak growth that we got isn't the new trend for the economy. So, they're still looking at rate increases later this year, but they want it to be proven that the economy really is on a decent track. And that was, as you say, no one data point proves it, but that was one piece of information that moved them in that direction.
Scott, down on the floor of the New York Stock Exchange, why are we down 97 points? What happened here?
Well, you have some weakness in the oil sector. You had a small little top in oil last week. And, if you look at the size of the move from Friday, down 100 points after being up 270, isn't so out of whack. And I agree with John is saying, as far as the data, we need to see a few more pieces of data to confirm that the actual, it's working. Rates low is improving the economy, because we didn't want to see all of a sudden a string of bad reports, because then, all of the rate cuts and all of the low interest rates, you know what, there's not much else they could do. So I think Goldilocks is what we need to see, and people shouldn't be upset about rising rates, because traders want good news to be good news, so we need to start to see it.
Yeah. Hey, Elliot, maybe it's nothing more than the oil market taking a breather after 8 straight weeks of gains. That's really what we saw after a bottoming out of the price. Suddenly we look good for a couple of months, and maybe the oil market got excited and started drilling up the rigs again and firing up different operations.
Anything's possible, but I'm not. We talked about it last week. We were trading $62, and yeah, it's exactly like you said. We had a straight $20 rally off the bottom, which isn't really that big of a jump when you consider the size of the down move that preceded that. I think that crude is just sort of stuck in a range right now. Personally, as you know, I am still bearish on the thing, but we've come off $3 from when I finally gave up selling it, and I think that the jury's still out on crude is what I think.
Oh, 100%. But I love it when you say anything's possible. In other words, okay, Liz, that's actually not the reason, but anything's possible. I do think that all those oil and energy names, Chris, in the S&P being down today, that hurts the market. We could pull up ExxonMobil for the Dow Jones Industrials, but we also have Greece once again trying to pay for reform, and they're not reforming, so we know that that's not happening. And maybe people woke up again on a Monday and said, oh, it's Monday, Greece is still a problem.
It could be, but I will say this, I don't think it's the product dragging down the stocks, that's all.
Let me ask Chris that same question. Chris Robinson?
Well, I think it's really technical, too. We were within 6 handles of the record high in futures, and this is the house that risk built. We're at the high of the range. If you're worried that we're going to have a correction, now's the time to come and get some hedges done. We're very close to record highs, and we weren't able to take them out in the futures market. I think that's key. A lot of people thought we were going to see an extension, and we didn't. Now they're backing off. So I think that's a big thing. And also, look at what the 10-year did today. 10-year looks like it's fallen out of bed. If you have June 10-year take out 126, you've got a real issue, and it doesn't matter what the Fed says. If the market says the rates are going to go higher, you'll see it first in the 10-year notes.
Do you think that's true, John? Do you think that's where we will see it? People will be looking for clues well in advance of when it happens, whether it's September or early 2016. John?
Well, I mean, I think the market is going to sniff out what the Fed's going to do before the Fed actually goes and does it.
Yeah, which is exactly what Chris just said.
That. Yeah. They don't want to surprise investors, and it's we keep coming back to this. It's going to come down to the data. When why are 10 years selling off? Well, we had pretty good jobs data on Friday, and that affects when people think the Fed is going to move.
When is the Fed moving, John? I mean, everybody on this screen wants to know. And you have people like Jack Welch and Warren Buffett saying, I don't see it happening, not so much because we're not strong, but because other parts of the world are weak. You had China cutting its rates, third time in 6 months. You have Europe still a huge question mark.
Well, I think for all of those reasons, the important question isn't when is the Fed going to move. Right now the market is betting around September. And, we've talked to Fed officials who are saying that that's kind of what they're thinking. Okay. The important question is, what do they do next? So they have put out forecasts that suggest they keep moving in 2016 and 2017, and they get rates up, to near 3% or more. There's a possibility, because of all of these other headwinds, that they just don't do a lot after they start moving rates because the global economy is so fragile.
And folks, 3%, it's not really anything bad when you look historically. Great to see all of you. John Hilsenrath warning us all it's coming. Scott Redler, Chris Robinson, and Elliot Warren. Thanks.